Hey everyone, Ian King here with your weekly Market Insights webinar. Today's webinar, of course, I'm joined by my friend and colleague, Jeff Yastine. Jeff, how's it going there?
It's going well, going okay.
Yeah, good to see you. Before we get into this week's webinar, I just want to please remind you, if you haven't subscribed, hit that subscribe button. If you like our content, feel free to give us a like, and any comments, please leave them below this video. We'll be sure to address them in a future webinar. This week, we got a big question on every investor's mind that we want to address, because last week the Dow and the S&P dropped 5%, the biggest drop we've seen since mid-March. Volatility seems to be back. Jeff, the question on everyone's mind is this rally over? What do you think about that?
I would be buying this dip. I would be buying this weakness. And part of the reason is that even if you're bearish, during summertime periods, in my experience, I think back to like 2000, we saw the dot-com bubble burst in March, and even as it appeared like a major sell-off was about to begin, and it did go down for a number of weeks, but then it stopped and it moved sideways. And in fact, the S&P 500 came within a whisper of making a brand new all-time high by Labor Day of that year, September, before the full sell-off began. So I'm very suspicious of markets that drift or that fall sharply on bad news in the summer times for that reason. And I feel like during the summers, where there's typically a bit less volume, especially years like this one, I feel like it's just easy enough for institutions to keep the market going until the fall. And this being an election year, even though we saw in 2000 where the market did sell off late in the year, historically, presidential election years are bullish. So you have to allow some room for the market to move higher here, despite what your own inclination is to just cut and run for the hills. All right.
Mm-hmm.
Now, I do think that we're going to go on to making new all-time highs before all this is over. I think there's a gap up there on the S&P 500 that we need to fill, and it's drawing the market higher in fits and stops through this correction period. This is just introducing some weakness that's sending everybody off to the sidelines and gives the institutions another chance to come in and buy.
Interesting point, Jeff. And I guess what you're saying here is kind of a famous quote has been attributed to Mark Twain, is that history doesn't repeat itself, but it does rhyme. So it sounds like what you're saying is we've seen this play out in the past before. I want to make a counterpoint to that argument and a couple of data points I've been following this week. And the first is that the number of coronavirus cases daily reported in the US has not gone down. Okay, so we've seen New York and New Jersey slow down, but we've also seen increases in other states like Texas, Arizona, Arkansas. And one other data point I want to mention is even in our home state here of Florida, we saw a 20% surge in new cases in the last week, mostly due because things started to reopen during Memorial Day weekend. Does this concern you at all, Jeff? I mean, could there be a chance that the economy has to fully shut down again because cases have surged? Or are we just going to say, the heck with it, we're just going to go forward and try to take care of the people who are, the most vulnerable in society? What are your thoughts on that?
I'm moving on a couple of different tracks here. One, of course, the rise in these new incidents is a concern. We have to remember, though, that there's also a lot more testing going on than there was even a month ago. I mean, CVS, the drugstore chain, they're doing massive amounts of testing. I gave blood not long ago, and now they're testing for COVID-19 or the antibodies when you give blood. So there's a lot more testing going on, so it makes sense that there's going to be more incidents being detected. Yes, there are certain aspects where, in certain areas where they're seeing these hotspots. Whether those spread or not, obviously, that's a concern. But on the other side of it, we do have this thought where there's a lot of people out there and they've been shut in for a long time. Now things are opening up. And I just don't know, even from a political and economic standpoint, whether people will stand to be pushed back inside, especially during the summertime, as acquiescent as they were earlier this year. I'm not sure we're going to get that now. I just, and it concerns me, but at the same time, I just think that's probably the reality that we're facing, and everybody's just going to have to deal with it, if I'm right, until September or October, and we see where all this goes, and whether there's a vaccination or something like that available by then, although it seems highly unlikely. Again, I'm just saying there's a lot of unknowns, both bad and potentially good, that are still ahead of us.
Right. And that brings up a good point. We took a poll of our beloved readers over the weekend, and 46% of you said that you'll wear a mask when you leave the house. 47% said, I'll go where I want, when I want, with no mask on. And then 7% said, I'm afraid to go out even with a mask on. So it seems like the majority of people are willing to go places even with the coronavirus around. Some advocate wearing masks, others don't. And I do get the sense that even if there is another spike in coronavirus cases, it's really not going to slow the economy down for that reason, unless the government has to step in and shut everything down again, which I think would be a disaster without another whole fiscal intervention and the whole thing we went through in earlier this year. But I want to make one more point about the potential sell-off and the end to this rally. And really what it is that when the market sold off earlier this year in February and March, we had that huge 35 or 36% drop in the S&P, it was based on uncertainty. Okay, the uncertainty of how deadly the coronavirus was, how quickly it was going to spread through the US, whether or not we would have a vaccine, whether or not the government would have a response. And a lot of those questions have been answered. So when you're selling stocks, or when you were selling back then, you were just selling into an unknown situation where we had no idea what this was going to look like. I think we kind of have a handle on how things are going to go. Look, I mean, it's a deadly virus and it kills a magnitude percent more than the flu. So we have to take this seriously. But I think that we kind of know the strategies, and people kind of adapt to this new reality in terms of how they get groceries and, how they can complete their job by working from home. And so I just think that humans are really resilient. Now, we face this big challenge and we kind of motivate the government to get involved. We motivate the private sector to start producing a vaccine. And I just think that if you're selling stocks now, and if we go into like a big hole in the next week or so, you're really going to regret selling into the idea that there is more uncertainty, because I think uncertainty has passed. I don't know where the bottom is going to be for the sell-off per se, but I think you can start taking a shot on these big down 4 or 5% days that we have by just picking up stocks that have been strong in your portfolio and you think are going to lead the economy over the next 10 years. So that's really where I'm thinking on that. And I guess we kind of agree to that point where this rally is not over yet by any stretch of the imagination, but the Fed is still on your side, as we say every week. Jerome Powell is as dovish as can be. And it's just a really good prospect for stocks having that tailwind. I want to shift gears to one more thing we want to talk about, Jeff, because we do have some economic data coming out this week. And I think one of the most important points we're going to see is on Tuesday, we're going to see May retail sales. Now, last month, it was a big deal because there was a 16.4% drop in April. We're looking for a 6.3% increase in May. And obviously, it's going to be higher in June with everything reopening. Can this retail sales number move the market, Jeff? What do you think about that?
I think it might move the market in the pre-open, you might say, but I do not think it's going to really make much of a difference to the overall market going forward after the release. I think really at this point, especially when it comes to things like retail sales, the stocks they're looking 6 months, a year down the road, as most stocks do when they're trading in these sorts of conditions. So I don't think it's really going to make a point. We're looking backward on that one. And I think at this point, with most of the bad news discounted, as you were saying earlier, the possibility of a second wave is something that has not been discounted. But for now, people are willing to look past it, I think. And when it comes to retail sales, they're looking at year-end numbers And if the stock hasn't moved that much, they're likely to buy it here in anticipation, a bet, if you will, that things are going to be better, in 6 months.
Mm-hmm. I agree. And you think about how many times just in the last 2 decades, it feels like the market has counted the American consumer out. Consumption and retail is basically an American pastime at this point, and especially with no sports going on. You find a lot of people who are online shopping for things that they probably don't need and making those purchases out of boredom. And it just seems to be one of the driving aspects of the U.S. economy is that people just keep consuming, and we keep getting cheaper and cheaper products from our supply chains coming out of Asia and the rest of the world. But I want to leave it there, Jeff, this week. Unless you have any other thing you want to tell our readers to watch out for this week. Anything on your mind?
The main thing is just don't let, like last night, Sunday night, this morning, Monday morning, when I got up at one point, I think the futures were down, 70, 80, 90 points or something like that.
Mm-hmm.
Don't let these sort of big drops, snow you too much. Yes, if it was the start of a major downtrend, that would be a concern. But so often, as you and I have seen for years now, these big declines in the S&P futures before the stock market actually opens tend to get bought in, even if it's not a long-lasting one. You can usually get at least a rally and get a better price through 10, 11 o'clock, noon hour, as opposed to just selling in sheer panic right as the opening bell begins, or in the early morning hours.
Never sell in the open.
No.
One thing I've learned though is that the overnight futures are a very illiquid market, and it's really easy for a couple hedge funds to really paint the tape. Yes. And portray something that's not reality when the market opens. So you do see a lot of those big reversals happen in the morning. Jeff, I want to thank you for joining us again this week, and want to thank you all for tuning in. Please feel free to leave a comment if there's anything you're wondering, and we'll be sure to get back to it at a further webinar. I'm Ian King for your Market Insights Webinar Weekly. Thank you.